Good morning, everyone. How are you guys doing? The past few days were super exciting, isn't it? Yesterday, on the 60-minute chart, we got a failed breakdown, and this should be the tacos, but technically it is a failed breakdown, and reclaiming the 9 and 21 EMA as well. So I bought food and Intel on this on the same 60-minute candle when the Qs and other indices starting to bounce. And IWM is really strong, and I think it kind of shows the market doesn't want to slow down. So got a lot of names that I'm tracking, and I would like to enter today, or maybe in next week. Like things are changing really fast, and I really like yesterday's action. Actually, Tuesday is also a pretty decent day for long side as well. Maybe because it's like pulling back into the weekly 9 EMA, but definitely yesterday's action is the confirmation, and it looks wonderful. And it's a little bit sad that I didn't bought SNDK because this looks so good. Still not really big fan of like a huge volume uh, on the top, and a pretty big, pretty wide ranges day in the past few days. And generally, like if you're seeing a huge volumes near the top, and it's not really that good. But in the in individual stock wise, if you're looking at different names, they are actually looking pretty decent. Like Cypher and Iron is still holding the 9 EMA weekly, but they are still kind of within the base. And I don't know, what does it mean? And like crowd that is cybersecurity names is bouncing off the 21, and now it's above all the EMAs again. This is the first pullback since they um, have the first leg up. Like everything seems really good. Yeah, I don't know. Like yeah, let's see. And yeah, and also today we got a SpaceX IPO. Everyone is looking forward to it. Everyone is watching it. The largest IPO ever, and a very very how does it go? Like imagine imaginable. Like a lot of stories, a lot of uh fiction story stocks. Maybe it could become the largest stock in the market. Like Elon said, it's the largest stock in the entire galaxy, not only the Earth, but very interesting. So if the Qs can pull back into the 60-minute 9, it will be really nice. And IWM is at the gap level, and also the previous highs, the all-time highs level. Let's see whether it will find resistance at this 292, 293. So I think is I'm done with today's trading. Shopping spree. Yeah. So far so good, but I don't want to be too excited. Although it looks really good. Do you agree it's very often like all the leaders align at the same day for great entry? Yes, and I think it's mostly resulted uh, from how fast the market moves in the recent 1 to 2 years. You won't get a really long consolidation and a long and a long period for the leaders to break out one at a time. Like most of them are just breaking out at the same day and take off with the market. We haven't spent much days down here. We also haven't spent much day down here. Uh, Here maybe a little longer, but we can see there's just a lot of V-shaped recovery and the lockout rally after a pullback or a correction or a bear market or a crash. Do you not mind that you're buying inside of ranges still? Completely not. I actually like them a lot. It means like this to me. It means the stock is not even extended and not even like I mean within the ranges are giving me the tightest stop most of the time. And if you I don't know, like Marvel, one of the best entry this year is within the range. Intel, if you bought it at on this day here or even the day before that, it's also within the range. Why do you need to wait until it went higher? Why would I choose to enter ENPH today? It's under the 9 and 21. Yes, maybe yeah, I would say this will be a bit anticipation of on a daily because it's still below the EMAs. But I like the weekly pullback and reclaim and the at the 9 EMA at the previous swing highs. And given the market is moving so fast, I don't want to miss this one because I really like the weekly structure of ENPH. Bought it today mainly on the 60-minute pullback into the 21 and the 9 EMA. Yeah, but it definitely has a higher chance of rolling over and falling down into the like testing the 50 again. But I'm totally okay with that. You just go from cash to 250% margin in 2 days. I go from shorting 50% to margin to 250% margin. EMPH stop around 2%. I use limit order this time. Around 53.90-ish. 2%. How much are you risking per trade? Most of them are 0.3%, but I think some of them maybe like 0.4%, and some of them are actually 0.2%. I think like A-Lab maybe. I think A-Lab stop is below 1.5%. Yeah, so I think this one risking a little bit less. Some of them are risking a little bit more. I don't know. Yeah, but I think it's around 0.3%, definitely. Is it fair to say I barely look at patterns, just as strong stocks and enter when the indices are favorable? I do not put a lot of attention on patterns, but if you consider like for Cypher, like a gap up above the EMAs and then a pullback, if you consider it as a pattern, and it is a pattern. But definitely strong stocks in maybe also the theme and the weekly structure is I pay a lot of attention to. And yeah, definitely I do consider like the indices also. Like IWM is what gives me the confidence, and also like the individual names SNDK yesterday, such a clean breakout, strong close, relative strength, and a lot of the a lot of the charts in different names is actually looking pretty good, especially on the weekly too. Like iron is looking so nice. Corning maybe a bit weaker. Maybe it needs a little bit more time. Or I don't know. Maybe this is a fake out, and then we starting to get rejected and goes down again. But right now, so far so good. Don't you do progressive exposure? Uh, I think this is a good topic to discuss about, and I believe in if we keep getting this type of V-shaped bounce, lockout rally without much consolidation or sideways or building bases during the uptrend, using progressive exposure could be holding you back a bit. If there's lots of leaders breaking out at the same time, and the market doesn't like to pull back, the market doesn't like to stop and maybe do a retest or maybe chopping around and letting the 9 or the 21 EMA to catch up, then you will rarely get another good entry, because the stock is going to fly high and they will be up there. So and this is a good topic to discuss about is so I think sometimes when you heard a concept, you learn a concept, you know something, you learn something from other traders, think twice, or like don't like blindly follow it. So the same thing as what I've just said. I mean, what I just shared. So anything that I think is I think is right, or I'm using, or or any comments that advice that I give, don't blindly follow it. Think twice, and maybe like I think the best method to examine or test it out is the market. Or is the market rewarding you, or will you be better trading this way or not? Best time to do progressive exposure is coming out of long basis. Yeah, I think it may. Yeah, I think it's true. Yeah, so maybe like for example, on this one, on this base, since November to January, it keep testing the previous highs. So maybe this type of long base is better for progressive exposure. So when it rallies, you test one or two, but it fails, so it's only losing one or two. And then keep testing until it works out. But on a like a V-shaped bounce, or like after the correction or pullback, maybe it's better to like be aggressive a little bit more. And generally, like after a correction, your potential upside is like the potential risk reward is the best, is the highest. In the market, just going straight up, when they really find the low, they won't like shakes you out and then do another, maybe has this second leg, build the second leg, and then really go higher after the shakeout. But I think I mean the pattern, or like it doesn't really matter that much. I think the individual names are just telling me it looks really good. They look really nice, and could be ready for the next move. And you know what? And I think today, no, really few people in the chat is talking about buying stuff like pullback buys. Zero. I saw zero comments on pullback buys today, and I saw a lot of pullback buys in the last few days of the rally. Like, should I buy the pullback on maybe like IONQ. When I sell IONQ, I think I saw some comments on like buying the pullback into 9 EMA on IONQ. Like yesterday, if you go through the watch list, there's a lot of the undercut and reclaims or the strong closes recovering from the 9 and or the 21 EMA, or maybe like finding support at the 50 EMA. When you buy in the range, how do you know that you are at the end and the stock is about to break out? How do you know you aren't still in the middle? I never know. And you don't have to be certain. You don't 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 seek for certainty in trading, I think, in my opinion. And even after the stock breaks out like this, the stock breaks out into the all-time highs, how can you be certain it is not a failed breakout and comes back down? You will never know. So I'm only focusing on managing the downside risk and finding the tightest entry points as possible. Maybe no need to be the really tight entry, but I can clearly define my risk. And what was the biggest indicator that you should get aggressive today? Was it the amount of strong looking individual stocks, the strong recovery of the lows in the indices? Yeah, I think both takes an important role, but I think they actually like correlate with each other, because indices the individual stocks are making up of the indices, and yeah, I think the action yesterday is pretty encouraging. It's pretty solid. Not only it has a failed breakdown, but it closes really strong. Like it pushes above the 60-minute EMAs or like the lower time frame EMAs, and even the daily 21. I think it closes barely below the 9. No, it's actually closing above the 9 by a little bit. But yeah, and this bounce from the index, from the Qs or like the IWM. I think IWM also is can represent the market breadth a little bit more, a little bit better. And but even if we take a look on the Qs, it's not only focusing like the bounce is not only resulted by from the Magnificent Sevens. It's like a lot of the stocks are closing strong yesterday and recovering, and like AMAT is already at the all-time highs. The semi names, the financial names are strong, and the mid caps, small caps, large caps, all of them has a few leaders. Actually, many leaders are breaking out and finding support, etc. So yeah, I think maybe individual stocks action is plays a larger role, but I do take the indices into consideration as well. Entered SNDK yesterday, but you panic sold it because afraid the breakout will fail. I can totally relate. I also like my I panic sold my arm as well on this day, 19th of May. But just forget about it and move on into the next one. There'll be a lot of opportunities coming in, I believe, in the coming days. Did you stay up last night until market close? Not really. I I actually stopped looking at the screen. I think after 11:30 or 11. Well, actually, not looking at the screen. I'm not planning to do any trades at all yesterday. I'm still shorting Marvel and Oklo. But somehow I pulled I take a quick look at the queues around. I think around, I don't know. I sometimes I take a look at every 15 minutes or so, but I just spotted the sudden. I think really I got lucky, and then I spotted the exact moment when the queue starting to reverse, find supporting with reverse higher. I think it is not normal. Like I mean normal in a way technically. So I quickly close my shorts and then trying to find some long opportunities. How to adjust the dollar volume annual indicator to, instead of showing volume, it should be really, if you just Google it, it will be there will I think you can solve it pretty easily. But you can just go to the indicators and search dollar volume, and then there will be a lot of dollar volume indicator. And I think I used this one, total dollar volume by Raffle Trades. I don't use any market news tracker. In your earlier years, how much time did you spend each day on trading and studying, and how has it changed compared to today? How did your studying outside of market hours look like? And I really don't have I don't have an answer for that. Like I do spend quite a lot of time back then because everything was new to me, and I explored many like strategies or indicators, and watched like interviews and sharing from different traders with different style, time frames. So I was like a sponge and trying to absorb as much as I could. But it feels very interesting to me, uh, and fascinating. I really won't like have a timer and like and tell myself, oh, today I should have spent 2 hours or 3 hours for studying trading. Because sometimes I just watched in YouTube video when I was uh traveling to school. Sometimes maybe I, I read the chapter of a trading book before I sleep. Maybe sometimes I pulled off a chart and flipped, trying to like find some a good entry spot. Maybe after I play the finish the game. I don't know, it just comes naturally. And nowadays I spend a lot less hours on studying. One is because like I think I've already learned uh like develop a pretty good foundation on trading, like different concepts on or knowledge. So it's easier for me to learn new things compared to like 5 years ago. And the second reason is like uh I don't have a need to learn a lot of new things right now. Like I think as long as my trading is doing okay, then I I'm just going to stick with it. But definitely I'm not um I'm not fear of change, like or like optimizing my entry tactics or selling rules. Yeah, but I think I focus more on improving my own trading mistakes rather than learning new things. When you study historical chart, do you really go into intraday charts? Yes, but some of them maybe like 5 years ago, then like the entries in 2020, they won't have like a 5 minute intraday charts in trading view, I think. So I'll go down, maybe like go down as low as I could, maybe like 15 minutes, 30 minutes, 60 minutes. Software names are pretty weak today, and the space names are also pretty weak today. Does daily P&L swings affect the mentality with 250% leverage? Yes, it definitely does. But you gradually get used to it. So right now I'm not really that like P&L obsessed, like really looking at the P&L every 15 minutes or every hours, and we'll get stomach when it turns from green to red, and also realizing the market doesn't give a doesn't give a damn on your P&L or your equity curve. It helps to reduce your urge or your mental side of things. Like either you're up 10% or down 10% is irrelevant to the markets and to your trades as well. What do you think about entering QBTS in the hourly chart when it breaks out? Weekly chart seems good. Fine, as it finds supports at the weekly 9. The quantum names are definitely on my focus list today. Yeah, I think I would go for IONQ because it's the strongest and the most liquid one. Yeah, I'm just not taking it today, but yeah, but it looks pretty good. It looks really nice. Yeah, I think like this 15-minute candle is a good entry actually. I would consider if you really would like to get in to buy IONQ, like after this 60-minute green candle and the pullback into the rising 9 or the 21 is a good entry, as you can clearly define your risk tightly there. And yeah, as you said, the weekly looks really nice, and the daily starting to like finding support at the 55 56 levels. And also this gap on Tuesday, it pulls back into the previous unfilled gap, and also the 50 EMA 2 and 5 support. So yeah, so this is the end of today's stream, and thank you guys for coming. We will see you in the next one.